In terms of the upcoming earnings, it's Bajaj Auto that will be in focus, slated to report its numbers today. And this time around, a resilient margin performance is what we are expecting. The margins are expected to be above that 20% mark for Bajaj Auto, while a double-digit growth beat on the top line, bottom line, as well as the operational EBITDA performance is what we are expecting. In terms of the volume performance, yes, of course, it's been a 16% jump in the volumes. The export market did very well. The three-wheelers did very well, while in the domestic market, the motorcycle segment did perform well, not as par to the expectation, but along with that, it was the three-wheeler and the product mix overall that flared so very well for Bajaj Auto, and that is something that is expected to help the numbers this time around, help them maintain their margins this time, and let's watch out for that, because given the fact that we have numbers from TVS Motors, there we have seen a bit of a disappointment. So for Bajaj Auto as well, a steady set is what we are expecting, so margins will be the key to watch out for. But apart from that, the management commentary in some of the new product launches and the demand outlook for the domestic market after that GST rate rationalization is something that we will be watching out for. So let's watch out for Apollo Hospitals, maybe a positive reaction, while for Bajaj Auto, we are getting to see that the numbers will be out today, so watch out for that. But LIC did come out with its Q2 earnings, and the company's consolidated net profit has seen a significant jump on a YY basis. Let me take it across to my colleague Rabinder, who is here to tell us more details on LIC numbers. Rabinder.
Well, as LIC reported strong set of number in Q2 FY26, and in this quarter, company's APE stood at 16,382 crore as compared to 16,465 crore year-on-year basis, and VNB has increased from 2,941 crore to 3,167 crore with an uptick of more than 7.5% year-on-year basis, and the company's VNB margins also showing good uptick of more than 145 basis point year-on-year basis, and in the first half of FY26, company's expense ratio has decreased from 146 basis point year-on-year basis. And if we talk about persistency ratio, then the persistency ratio on the premium basis for the 13 months stand at 75.29%, and for the 61 month it was at 63.81%. And if we talk about the persistency ratio on the policy basis, then for 13 months it has decreased from 67.23% to 63.36%, and management remain confident for the second half of FY26. They say that the second half of FY26 will show in volume, so will show a recovery, and the growth in policies sold showing substantial growth due to the new pricing and customer benefit resulting from the GST exemption. And companies aims to offset the non-availability of ITC through increased volume and operational efficiency. And brokerages has come out with a note after the strong set of result, and Goldman Sachs has maintained the neutral rating and hike target price rupees 955 as compared to earlier target price rupees 930. And Citi has also come out with a note while they have maintained the buy rating with target price rupees 1345. They say that the Q2 FY26 was operationally strong with sustained focus on product mix realignment alongside with improving sub-segment margins, while business mix realignment is encouraging, and the market share stabilization is in individual AP will likely to be monitored for the re-rating or for the LIC, and they expect higher volumes which is driven by operating leverage, and improving quality of business should remain paramount to maintaining the current VNB trajectory. So back of the strong set of number and positive management commentary and the positive brokerage note, LIC can be in focus in today's trading session.
So much, Rabinder, for getting us all those details. But in some of the other upcoming earnings, Trent will be in focus today. Let me take it across to Snehi, who is here to tell us what the street is really penciling in this time. Snehi.
Well, yes, so one of the nifty companies coming out with its earnings later today is going to be Trent. Now, overall, we're expecting a decent set of numbers, not too bad, but nothing too good either. So if you take a look at these numbers on a standalone year-on-year basis, in the Q2 update, the management had guided for the revenue from sales to be at around 5,002 crore rupees. The revenue that the street is penciling in is closer to 4,792 at least. So what the management has guided in its update looks better than what the street was penciling in. But despite that, the trend that we have seen of revenue deceleration on a year-on-year basis, that will continue because we're seeing the revenue to go up only by about 18.8% this year, which according to Trent's past performance and Trent's history is slightly lower. EBITDA is seen at 781 crores, up about 22%. Net profit, we're penciling this number to be absolutely flat at 430 crores. This time last year that number was 423 crores, so not much uptick over there. Margins are expected to improve at 16.3% compared to 15.9%, a 40 bips improvement on a year-on-year basis. Now in their quarter 2 update, the management had said that they have opened 13 stores in Westside and 40 stores in Zudio for the quarter gone by. So key expectations are going to be that store additions are going to aid revenue this time around. Revenue per square feet on the flip side is expected to decline 13%. Area growth of 3% year-on-year in terms of total square feet that they have. Revenue growth will be lagging area growth this time around, and dividend income from the Inditex JV will be aiding their other income elements. So when the numbers do come out later today, watch out for SSSG growth, demand outlook from tier 2 and 3 cities, and some other factors. But all in all, we're expecting a decent set of numbers from Trent for quarter 2.
All right, thank you so much, Snehi, for getting us all those details. So let's watch out for that. But with this, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and the entire team who put this show together. Thank you so much for tuning in.